on a day when Hasbro is up double digits and Twitter is up double digits, the most surprising thing to me is Procter & Gamble. Procter & Gamble's third quarter profits and revenue came in higher than expected. This is the third quarter in a row they've put up some, I would argue, some pretty impressive growth. The stock is actually down a couple percentage points, but it's had this staggering run over the past year. And when we say staggering, what I mean by that is 40%. For a company of Procter & Gamble's size and history, 40% growth in a single year is astonishing to me.
It is astonishing, and you're not going to find the explanation of that in something like the quarterly numbers today, which, while good, better than expectations, volume was up 3% for the quarter across all products. They were hurt by foreign exchange a little bit. Net sales up 1%. Organic volume up 2%. These are, low single-digit numbers in terms of your growth, and yet the stock is up 46% year over year, and that's really a lot of multiple expansion. I think that they have sort of completed this reduction of the number of brands they have down to the core 65 that they have today, having eliminated many more than that. And so it seems like the execution of that reduction has worked out well. But if you're looking for reasons why the stock is not doing the same thing as the other two companies that we've mentioned today, it's more closer to a stagnant kind of sales environment.
So two things. One, we started doing this podcast in early 2011. And at that time, Procter & Gamble had somewhere in the neighborhood of 115 to 120 brands under its umbrella. So the methodical reduction in the number of brands in their portfolio has worked out well for them. Two, this is a company, and this is one of the most surprising things to me about Procter & Gamble. This is a company that appears to be exercising some pricing power in terms of their detergent brands, their laundry brands, that sort of thing. And oh, by the way, they increased their dividend for this. It is now the 63rd year in a row that Procter & Gamble has increased their dividend. So, to the extent that you're looking for a dividend king and not just a dividend aristocrat, you might want to take a look at Procter & Gamble.
Yeah, everything went pretty well out of their 5 different sales divisions, other than grooming. I think that's a function of the Gillette brand.
I was going to say they have Gillette, and that's
nobody uses Gillette anymore, apparently.
Well, it's not that nobody uses Gillette anymore. It's that
it's all Harry's, isn't it?
Yeah, I mean. All kidding aside, yes, Harry's is one of our sponsors, and we love Harry's, and I'm a happy customer of Harry's and have been for years. But the fact of the matter is that Gillette basically operated a monopoly for, I guess it was Gillette and Schick. There were basically 2 razor brands, and they kind of had the universe to themselves. And then upstarts like Harry's come along, and it's like, and Dollar Shave Club too, and it's like, I guess. Yeah, I guess this cash cow that we've been riding for so many years, we're not going to be able to do this in quite the same way.
Yeah, well, part of that was that once you've got a business strategy, which the attractiveness of which is literally encapsulated by a phrase that you then try to apply everywhere else, which is like the razor and blade strategy, right? That was repeated enough times over enough decades that others looked at it and say, what if I literally applied the razor and blade strategy, since that's making so much money off of these 2 brands, maybe I could make some money myself doing that. And that has turned out to be the case.
There was a point in time when Hewlett-Packard was making a nice buck off of their razor and blade strategy, which was printers. We're going to sell printers basically at cost, and then we're just going to jack up the cost of the printer ink. And again, for a good stretch of time, that worked out well for Hewlett-Packard.